not to beat a dead horse here, but as I told you before, the cloud-based software companies keep reporting these fabulous results. With a few notable exceptions, the once red-hot stocks then end up getting pulverized. It's a little bit crazy. I keep coming back to this point because because the cloud stocks are really the most important leadership group in this whole market. They led the whole market higher in January and February. Then they led us lower after the pattern emerged when Workday reported a fantastic quarter and the stock went down. That's why we need them to start breaking that pattern, which brings me to Coupa Software, one of our cloud princes with a software platform that helps businesses identify cost savings. That's why they call themselves the Salesforce of expense management. Coupa reported last night, and its story has played out a bit differently. While the company delivered excellent top and bottom line beat, 45% subscription growth, management's earnings guidance came in somewhat higher. This earnings guidance, somewhat weaker than expected for the next quarter and the full year. But what really matters to me is the far more bullish revenue forecast. Hell, come on, people own this stock for the revenue growth, not the earnings. Nobody wants to read a headline about downside earnings growth, though. Still, Coupa's stock held up remarkably well. When the market opened, the darn thing was up more than $2. Then it swiftly gave back those gains and finished the day just down $3. Not a totally new narrative, as I've been saying. Still got a cloud stock going lower after a good quarter. But unlike Workday or Salesforce or ServiceNow or Splunk, this one barely got dinged. Now, Coupa also hosted an analyst meeting earlier today. Let's take a closer look about what they said. Let's talk to Rob Bernshteyn, the chairman and CEO of Coupa Software, get a better sense of the quarter and his company's prospects. Mr. Bernshteyn, welcome back to Mad Money. Good to see you, sir.
Great to be with you.
Thank you. Have a seat. We've been talking about this pattern because, frankly, these stocks have been the absolute best. And I want you to talk about how your stock has had remarkable growth, not just last year, but this year. And you just closed out fiscal 2019 with the strongest financial performance yet. You had that great analyst meeting. Could you just give us some of the bullet points that you highlighted to the analysts today?
Well, look, the bullet points have been the same for nearly a decade now in building this business. Really strong growth, very careful management of sales and marketing expenditures, and continued leverage to the bottom line. And we feel like we're really just getting started with this business. You know, we've only penetrated less than 10% of the Global 500, Global 1000, or Fortune 500. And we're landing these big deals, and we're getting these customers live and getting them successful and driving a lot of value to them, which is what this is all about, Jim.
Okay, so we've just recently profiled Shopify, one of our absolute favorites. That's a client of yours. And we've also had Lululemon on a bunch of times. How do they save money using Coupa?
Well, they do a lot more than save money. They drive compliance, visibility, transaction flow through Coupa. But I'll tell you examples of some of the large-scale customers that we have. You look at a company that does data center operations for us. They save more than $500,000 on air filters through Coupa. We have a manufacturing company that saved more than $5 million on freight, air and ocean freight. We have a retailer that saved more than $10 million, Jim, on refrigerators through Coupa.
Well, wait a second. I have a lot of companies that keep saying freight's bad, freight's bad, freight. I mean, if you have that penetration that's that small, a lot of these guys should be calling you.
Well, a lot of them are calling us, and that's why we're managing our way into the market. We're not pushing, huge marketing campaigns and massive outreach with salespeople all over the world. We're doing it in a managed way, and we're making sure each customer is getting live and successful. The companies you named, the Shopify, Peloton, Looker, some of these high-growth companies, they're growing with us. They're putting in these controls early on so they can have visibility to spend, and they can manage spend effectively for years and years to come.
Well, I thought it was pretty interesting that some of these companies are saying, listen, we use Coupa Pay. We want to buy through Coupa Pay. In other words, they're just part of an ecosystem where they just kind of they just want you embedded, is what it sounds like.
That's right. They came to us and they're saying, look, we spend through Coupa, we buy through Coupa, why can't we also pay through Coupa? So we're giving them capabilities for doing that. We're streamlining the virtual credit card payment process. Now, instead of having one of those corporate cards that somebody holds somewhere and makes purchases without visibility, we're running virtual cards through Coupa. You can go in, request the things you need, request the services you need, get a virtual credit card number right there in front of you, and make the payment. It's simple for the end user, and the company still has visibility to all the spending that's happening, so they could continue to optimize those categories of spend.
And you have good federal business, U.S. Postal Service. I mean, to me, that's a fantastic client. They got to save.
We're very excited about that customer of ours in federal. Now, over 500,000 employees or workers at the United States Postal Service. They're spending billions of dollars on everything from maintenance to operations to things like pest control, Jim. I mean, we're going to help them optimize all of that, get it to the right vendors, and help them save a lot of money. I mean, this is a very significant deployment in federal government for us.
Okay, so my utility is National Grid, and they're a customer of yours, and I thought it was very interesting. You are integrated with HANA from SAP. Now, I remember when SAP bought Ariba. I guess about 7 years ago. So you're able, even though Ariba is clearly a competitor when you look at what they do, you're able to work with SAP anyway?
We work with SAP. We're certified by SAP. We integrate to multiple instances of ERP at many of our customers. We can implement connecting to Oracle. We implement connecting to virtually any ERP out there. The version of truth as it pertains to spend is happening in Coupa. We're the system of interaction for spend, and we reconcile back down to a GL that happens to be SAP in some cases Oracle and others.
Is that how you're able? I mean, you had 51% billings growth. I mean, now, Ariba is a gigantic company. Obviously, you're growing much faster than they are. You're headed toward a huge, huge revenue growth ultimately.
Well, we're growing rapidly, but also growing thoughtfully. We're making sure that each and every customer is getting measurable value from working with us, and they grow that value. We're not a products company at all, Jim. We're a value as a service company.
Right.
We offer value through our technology platform and our best practices with our customers.
One last thing. BSM to me is Bar San Miguel, but BSM for you is the business spend platform, and that's really what we have to learn. If you're going to own the stock, you have to learn about the platform, correct?
That's exactly right.
All right. Well, you tell a great story because you have a great story. That is Rob Bernshteyn, CEO of Coupa Software. Guys, this one is down a few bucks from where it should be, and I think it's going to have many, many years. You heard about where in its infancy, total adjustable market here is gigantic. Mad Money's back after the break. Booyah! Jim Cramer here from Mad Money. Thanks for watching CNBC on YouTube. Click here to subscribe and get the jump on my exclusives with CEOs, plus market news, investing advice, and a whole lot more.